This is a monetary policy statement for the month of April 2022. The Bank of Uganda has maintained the central bank rate, CBR, at 6.5% at the Monetary Policy Committee meeting of April 2022. The economy continues to recover from the COVID-19 pandemic-related downturn. Annual growth of real gross domestic product (GDP) was estimated at 5.2% in quarter to December 2021 from 3.5% in the quarter to September 2021. The full reopening of the economy and the diminished impact of the pandemic unlocked the factors that had held back economic activity. Nonetheless, there are indications that the risk of weakening growth momentum due to adverse global factors that was flagged in the February 2022 monetary policy statement may have materialized. Consequently, economic growth is now projected in the range of 5.5% to 6% in 2022 from 6% earlier projected. The most recent high-frequency economic indicators pointed to a weakening of the domestic growth momentum in March 2022. The spike in global geopolitical tensions and supply chain disruptions are likely to hinder the stability and growth of the economy. Inflation has remained below the medium term, that is 2 to 3 years ahead, target of 5% for 5 years to March 2022. However, inflation has risen in the last 2 months. The annual headline and core inflation rose to 3.7% and 3.6% in March 2022 from 2.7% and 2.3% respectively in January 2022. This is mainly due to supply chain disruptions that have led to a spike in commodity and energy prices. Nevertheless, inflation remains below the target, partly because the spike in prices of some commodities, such as those of vegetable oil products, carry a relatively smaller share of household budgets. Also, the strong shilling exchange rate has helped to dampen price pressures. The inflationary developments have led to a revision in the outlook for inflation. Annual headline and core inflation is now forecast to average 5.2% and 4.7% respectively in 2022 from 4.5% and 3.9% as had been projected in the February 2022 forecast round. In the medium term, inflation is projected slightly above the target. There are considerable risks surrounding the outlook for inflation, with the balance of risk tilted upwards. The main upward risks include higher commodity or higher global commodity and energy prices due to worsening of the Russia-Ukraine conflict, heightened uncertainty in the financial markets due to the sanctions on Russia, and anticipated tightening of monetary conditions by central banks in advanced economies to contain escalating inflation, which could drive financial flows from frontier markets like Uganda to safe havens, US dollar assets, thereby weakening the shilling exchange rate. Potential worsening of disruptions to global supply chains due to stringent controls of new strains of the COVID-19 virus, for example, China's zero-COVID policy. The main downside risks include diminished domestic demand due to higher energy and commodity prices beyond general affordability, and a possible food crop harvest could lead to lower market prices. Even though inflation is forecast slightly above 5% target in the medium term, the initial impact of the recent price hikes has not spread across the basket of consumer goods and services. Indeed, the prices of some components of the consumer price basket have fallen. As such, inflation expectations remain contained. Accordingly, the MPC judged that it was prudent to maintain the CBR at 6.5% at this point. Similarly, the ban on the CBR has been maintained at plus and minus 2 percentage points. Consequently, the margins on the rediscount and bank rates remain at 3 percentage points and 4 percentage points over the CBR, yielding rediscount and bank rates of 9.5 and 10.5% respectively. The Bank of Uganda will closely track inflationary developments and take appropriate preemptive action where necessary to ensure inflationary expectations remain contained around the medium-term target going forward. The Bank of Uganda will maintain the credit relief measures for the education and hospitality sectors, which remained under lockdown for an extended period. Furthermore, Bank of Uganda will maintain the COVID-19 Liquidity Assistance Program, popularly known as CLAP, to manage potential liquidity risks arising from the pandemic until economic conditions normalizes. That marks the end of the statement. Thank you.